This is the trade association of the perps, right? And you know what they produced? A poster. So when you watch a DVD of a movie, you'll see the warning right at the beginning, the FBI prosecutes cases of copyright violation. They produce a poster oriented not about banks engaged in control fraud, but you, the consumer, you better not steal from this bank or the FBI will come and get you. It's amazing stuff. How are we time-wise? Where should we? I know we started back, so where do you? Okay. Let me go back to and give you a little, this is both academic and practical, on how do you actually do one of these accounting control frauds. Because these are the ones that produce the real financial super predators of the modern world. And the key is, from the CEO's standpoint, this provides a way to become guaranteed that you'll get rich while minimizing the risk of prosecution simultaneously. So, how do we optimize accounting fraud? Right? Did you ever think you'd come to a conference of AMI where they're teaching you how to optimize accounting fraud? First, you're going to optimize the firm as a weapon. So you're going to have it invest in assets without readily verifiable market values. Back to the question that you taught, research in part. Right? Because if they aren't readily verifiable, then it's much easier to inflate their values, and it's much easier to hide real losses. And we're going to do both of those things. We're going to suborn the controls and turn them into our most valuable allies. We don't defeat internal and external controls. If you know the use of the word elegance in mathematics, the elegant solution is not to defeat controls, but to turn them into your most valuable allies. You use the positive reputation of the law firm, of the top-tier audit firm, which blesses your financial statements, to help you sell securities, and then to help you fend off prosecution. Because you say, what do you mean, inflated? Everything I did went through a top-tier audit firm, and they blessed it with a clean opinion. You convert firm funds to the CEO's personal benefit through normal corporate compensation mechanisms. And the fact that the accounting fraud produces the record profit and that modern executive compensation allows obscene bonuses is what makes all of this work. America is still the kind of place that even if a CEO puts his hand into the till and takes $10,000, he will likely go to jail for years. But you can take $10 billion as long as you do it through bonuses and stock appreciation with minimal risk of prosecution. And the most audacious of these frauds also change the external environment. Because the greatest return on assets is always a political contribution for one of these frauds. Right? And this is, you create the Enron black hole. I told you in the savings and loan context, Keating was able to get a majority of the House of Representatives to co-sponsor a resolution, which, by the way, included Gingrich, co-sponsor a resolution calling on us not to go forward with the re-regulation of the industry. And, of course, he was able to get 5 U.S. senators to try to keep us from taking an enforcement action against the largest violation of the rules in the history of the agency, and a kind of violation that always led to the failure of the firm. That's what Lincoln Savings was all about in the Keating 5. So those are the 4 unique things that the person who controls the organization can do. That's why control fraud is so dangerous. Now, typically, the person who controls the organization is the CEO. So from now on, I'm just going to call it CEO. But there are lots of cases like Keating was never a CEO or even on the board, but he truly controlled it. Okay, how do we optimize the profit? And most of these things are going to belong in quotation marks. I won't always do it. It's a really simple formula, and the key to understanding this is that it is guaranteed. And so all the analysis of this crisis that focuses on risk is almost completely wrong, I would argue. This was done as a sure thing. Here's the formula. Extremely rapid growth, Ponzi-like. Lend to the uncreditworthy. These two things are related. You can't just decide to take over an existing marketplace, right? So you can't simply decide, hey, I'm going to take all the market share in making good home loans. What would you have to do if you tried to take market share away from existing competitors who are making home loans to creditworthy people? What would you have to do? Reduce your interest rate. That's your price, right? Your fees and your interest rates, you'd have to lower them. Is that a good way to maximize accounting income? Lower your fees and income, interest rate? Probably not. Conversely, if you've got a whole underserved or unserved community, you can grow very rapidly by bringing them in. But often they will be uncreditworthy. They won't be able to pay it back. Not a problem if what you're doing is control fraud. It's actually an opportunity because you charge what kind of fees and interest rates to people who are less creditworthy? Higher. That's good for doing this. Extreme leverage is the third. You inflate the appraisals and loan size. Remember when I showed that how pervasive that was and how they were coercing people to inflate it? Is that in the interest of an honest lender to inflate the appraisal value? Completely contrary to it. And of course, you don't put on loss reserves. You are mathematically certain, if you do this, to report exceptional profits. That's why the Lincoln Savings of the world, the Enrons of the world, report not just good profits, but Lincoln reported it was the most profitable S&L in America. At $3.4 billion, it was the most expensive S&L failure. Doesn't that sound quaint? $3.4 billion? Chump change in the modern crisis, right? And note this. This actually causes your reputation to surge, your ego, your status. You can now make those charitable contributions. You can make those political contributions. You can have those photos taken of you standing next to the mayor and the governor and, you know, the leading cultural figures. You can give an award to Alan Greenspan just before Enron collapses. This will produce a distinctive business pattern. And this is what we used as regulators in the savings and loan crisis to target these institutions while they were reporting they were the most profitable S&Ls in America. Now, those of you who have any legal background, imagine I was a litigation director during part of this. So here's a hypothetical, not so hypothetical discussion. Mr. Black, you're here trying to defend the government takedown of the most profitable S&L in America. Yes, Your Honor. Now, you do realize you have 500 institutions reporting that they are GAAP insolvent. Yes, Your Honor. But you're not closing them. No, Your Honor. You're closing the most profitable S&L in America. Yes, Your Honor. Well, I always knew government bureaucrats were assholes. You know, type of thing. But it worked. We triaged because we knew this pattern only made sense for fraud, and we knew it was distinctive, and that we wouldn't, if you think of type 1, type 2 errors, that we wouldn't be picking up honest places improperly if they followed this pattern. So you're going to have a really perverse compensation system. You're going to put your loan officers on bonuses based on quantity, not on quality of the loans that they do. You're going to have your executives on short-term gain versus long-term. By the way, the studies since the crisis, the percentage of executive compensation coming from short-term gains since the crisis has increased rather than decreased. That's how well CEOs have reacted to the crisis. You're going to have either non-existent or perverse